Iran's economy has just hit a breaking point. The country's currency, the Iranian Rial, has collapsed to record lows against the US dollar. Inflation is spiraling, and on top of that, nationwide internet access has been cut. This isn't just local news. For traders, this is a real-time example of how fast financial systems can break, and how those shocks ripple into forex, crypto, and global risk sentiment. Today I want to briefly explain what's happening in Iran, why it matters to global markets, and what lessons traders can get from it. Right now, Iran is facing severe economic stress. The Iranian Rial it's lost a huge amount of its value, especially on the black market where people actually exchange money day to day. As inflation rises, basic goods become more expensive and people lose confidence in the currency almost overnight. As this happened, protests began to spread, and in response, the government shut down large parts of the country's internet access. That single action changes everything. People suddenly can't access online banking, foreign exchange rates, international markets, or even their crypto wallets. For everyday citizens, this means that savings can be trapped while prices keep rising. For traders watching globally, this is a textbook example of how currency collapses. Capital controls and political control all connect. When a currency collapses like this, it doesn't stay isolated. Markets immediately start thinking about inflation, capital flight, sanctions, and protect risks. Investors and institutions reassess how much risk they want exposure to, especially in emerging markets. Historically, during these moments, money tends to, go to safer currencies, the US dollar, the Japanese yen, and sometimes gold, benefits because it's seen as more of a safe storage of value. This is why events like this often strengthen the US dollar in the global forex market, even though the crisis is happening somewhere else. For beginners, the key idea is simple. When uncertainty rises somewhere in the world, traders reduce risk and move money into assets they trust more. That shift is what creates movement in forex pairs.
Our sponsor today is Lead Sniper, and they will help you find quality links even when you think you're in the darkest of places and you can't find any clients. Lead Sniper has been doing this for a long time, and they have worked with thousands of marketers, including myself. And the fact that they want to sponsor us today makes me very happy. If you need targeted data that actually converts, then Lead Sniper is for you. They have a Google Map scraper, they have a Google search scraper, and they have a yellow page scraper, with more tools coming out soon. So go ahead, get in the description, click the links that takes you over to Lead Sniper. Back to the video.
Crypto plays an important role in this story. In countries with high inflation, like Iran, many people turn to Bitcoin or stablecoins as a way of protecting their savings from currency collapse. On paper, crypto looks like a solution, but this situation highlights a critical weakness that people don't always think about. When the internet goes down, access to crypto goes down with it. Even though blockchain is decentralized, people still need connectivity to access wallets, exchanges, and price information. Without internet access, crypto becomes effectively frozen. This raises an important question for crypto holders everywhere. Censorship resistance matters, but access matters just as much. Without access, even decentralized assets can become unreachable. From a forex perspective, large currency collapses often act as a risk-off signals for global markets. When traders see emerging market currencies fail, they become more cautious overall. This can push the US dollar higher against risk currencies, while volatility increases across major pairs. You'll often see traders focusing more on pairs like Euro USD, USD JPY, or USD CHF during times like this, because those pairs tend to reflect changes in global risk sentiment more clearly. This is where experience matters. Understanding where the markets are in a risk on or risk off environment helps traders avoid forcing trades and instead aligning with the flow. Personally, during macro events like this, I want to quickly adjust between different markets and pairs depending on how sentiment shifts. The biggest lesson from what's happening in Iran is this. Markets don't just move because of charts, they move because of systems failures. Confidence disappears and access gets restricted. Smart traders pay attention to macro events like currency collapses, inflation spikes, sanctions, and even internet shutdowns, because these events shape long-term market behaviors. This is why trading isn't just technical, it's contextual. What's happening in Iran is a reminder of how quickly financial stability can disappear, and why traders need to think globally, not just locally. If you want updates on major macro events like this and how they affect forex and crypto markets, make sure to follow. And if you want to trade these markets with a platform built for volatility, you can check out PU Prime through the link below. This is also where having the right trading setup matters. During volatile macro events, I want reliable execution, access to multiple markets and the ability to manage risk without friction. That's why I use PU Prime as my broker. With PU Prime, I can trade major forex pairs, monitor USD strength, and also keep an eye on crypto and other markets from the same platform. When volatility increases, tight spreads and fast execution become especially important because delays and slippage can add unnecessary risk. Easy deposits and withdrawals also matter more than people think, especially during fast-moving market conditions where flexibility is key. It's not about chasing headlines, it's about being prepared for when they hit.